Hey, what's up, traders? Why the day was. Welcome again to another episode of Stock Market Review with Luwep Trading. Coach Lottie is here. We're about to get into it right now. So right now, you guys can see what's going on in the market. And I told you guys yesterday we have headlines pretty much dictating what's going on in the market. Although there's an argument to be made. While the headlines are whipsawing the market up and down. So far, what we can see on the higher time frame, the technicals still holds. That's on the higher time frame. Why exactly is nobody believing what's going on? First of all, today we had a bounce in the S&P 500 that was green. The Dow was over 300 points. At some point, I think it was well above 600 points. So we've actually cooled off. We faded, as I told you guys yesterday. I warned you guys yesterday, as in the live. I told you guys if we went up, we will fade toward the close, which is exactly what I did. We shot up in the morning, got to resistance level. I bought puts, and as we faded down, right toward the close, I took some profit off. Whatever happens tomorrow. But I already took out some profit. I cannot lose on those trades again. So why exactly are we whipsawing like this? Both sides are going all kind of ways. So we had a situation where Trump came out and says we are negotiating with Iran. I told you guys yesterday again, but this is what exactly is going on, right? Iran came out publicly and rejected there was any negotiations going on. So those guys ended up coming out. The White House came out and said yes, we do have peace talks. So what Iran pretty much came out to do, what they said, well, what the U.S. did was, I believe it's Steve Witkoff. Steve Witkoff sent a WhatsApp message to one of those guys. They saw it, they read it, but they never responded. Then when they never responded, so he sent the 15 point peace talk. They read it again. They never responded. So today they said since the White House thinks them not answering means they are negotiating those points, they came out and publicly reject this whole thing. They have their own five demands that they have. I think it is reparations for all their losses, full control over the Strait of Hormuz, all these kind of things. In the meantime, as I told you guys, we still have troops being deployed. The White House is requesting additional troops to go to Karg Island. At the same time, Iran is also preparing and laying out mines all over that little island. They laying out mines, just preparing it for a counteroffensive, and apparently they are also mobilizing for any neighboring countries, like let's say the UAE, Saudi Arabia, Bahrain. So any of those Gulf or GCC countries, the Gulf states, any of those that participates in that, meaning giving land to the U.S. for ground operations and things like that. As soon as this war is over, they have announced they will invade those countries. So I feel like this is getting a bit more. We're getting more escalation. So this is where we're sitting. And one other thing that we have that we did not, I'm actually proud of that because I've been mentioning that a lot. I see on CNBC, I was so happy today. If you're watching this, if you're a retail trader who watch this and you have been thinking about should you be buying the dip yet or whatever it is, and you have not done so, I want to say I am proud of you. Why? I like when CNBC starts complaining about retail traders are not buying. All right, because that's what it is. It's the game that's being played. They want retail traders to come in and buy so they can drop it on our head. And every single time they try to push it up, retail traders just don't follow. And those guys are complaining. We need to convince people that the market is the best way to build wealth and blah, blah, blah. Since when? When the market is going up nonstop. Have you heard anybody on CNBC comes and talk about how, well, it's really sad that we don't have enough retail traders buying in so they can participate in the market making this crazy rally doing all-time highs. You never hear that. So ask yourself this question. Why are they asking retail traders to come back in? Why are they trying to convince you to come in? Why do you need us? Retail traders represent barely 5 to 6% of the entire market. That's it. 5 to 6%. Why don't you guys call on those other institutions? But anyway, if you didn't buy anything, I want to say I'm part of you by staying on the sideline and just wait for things to settle and whatever. As I have been saying for a long time, for me personally, this is not a time for me to be buying anything long term. There are a lot of things that looks very, very, very attractive right now, especially in the tech sector. I don't mind missing the bottom in the tech sector because one of the things I'm realizing as well, a lot of them are actually losing their support levels. They are dipping below support levels. And I have no problem just sitting back and waiting. So now, why? I'm going to let you guys know why I'm doing that. First and foremost, I'm doing that because right now the US economy is in shambles. The only part of the economy that's working right now is the stock market. The housing market is horrible. The job market is horrible. Farming is you have a lot of farms are going out of business, so we having issues there. Now we having an oil issue. We have a debt crisis. We have so many things going against us. Now this is not talking about like, hey, things are going to the crapper and things are horrible and whatever. What I'm saying is it's okay to sit on the sideline until the dust settles. It's okay. Or if I wanted to go in right now, I would probably, if I wanted to buy something, I would nibble. Nibble is sort of like a finance term when people talk about they nibble, meaning you buy just a little bit. All right, like you started to accumulate a position, but you're not buying half of your positions. You're not buying 25% of your positions. Maybe you buy 10% here. I'm not very confident, but I just want to hold something, so I buy. Like it's like you. That's what we call DCA. So you dollar cost average in. So this is the way you guys do it. All right. Now we got this out of the way, guys. I want to welcome everybody once again to another episode. Thank you for being here. If you are here, make sure to smash the like button for me. I really appreciate that. Give me some thumbs up. Let's get the likes up for me. I would really appreciate that. For those of you guys who watch this on replay, I hope you guys can have a better time today than yesterday because today, as you guys can tell, I have a lot more energy. I still haven't been able to eat anything, but you know what? We are here, and I'll find some energy. It might be the fact that I had a good day today, so maybe that's that. But we're gonna get into it, guys. Again, I must let you guys know I am not your financial advisor. What I'm doing here is letting you guys know what the charts are telling me and how I'm executing. If you are nothing I say is any suggestions for you to buy, hold, or sell, and if you are looking to trade, do your own due diligence. And if you don't know what you're doing, contact a financial advisor. That way you can do things with some knowledge. All right, and big reminder: trading does carry a lot of risk, including loss of capital. All right. With that being said, I want to give a shout out. I didn't forget about you guys. For those of you guys who are part of the community who pass your Apex evaluation today, I want to say congrats out to everybody. James was always here in the chat with us. Again, passed another 50K account today. So Eval passed. Congrats on that. And Charlie won passing another 150K accounts. Man, I can't wait for you guys to start getting those some payouts on those accounts. Congratulations. That being said, if you're somebody who's interested in learning how to trade futures, especially with prop firms, I do have a system that I teach. Contact me for more details. I'll be more than happy to give you some info. See how we can get things moving. All right, we're going to get into it here, guys. Today was another interesting day today. Very, very interesting day. We are going to look at the let's start with the S&P 500. We're gonna start with the S&P 500 and see exactly where that leaves us. There we go. This is what we're doing. This is where we are, guys. Right now, it seems like we are consolidating still a little bit, right? We have a bit of a zone. This is the daily time frame. That's the daily chart right now. This is our 200-day moving average. All right, right. Meaning right now we are trading below the 200-day moving average. History have shown us, unless we have a big pop, unless we have no, not a big pop, unless we recover that 200-day moving average very quickly, we typically have some sort of events that happens where we have a ridiculously fast downturn. All right, now let's take a look at that to see exactly what I'm talking about. Let's see the last time we went below the 200-day moving average. This was the last time we did that. Now, you can make an argument to say, well, maybe this happened, this big drop happened. That was a little different because this was around the Liberation Day. Excuse me, guys. Had to sneeze there. Had to sneeze there a little bit. Maybe that was around Liberation Day, so this was an anomaly. Is it? We were below, so that's one. And you guys can see how violent that drop was. This was a quick drop. Let me see. If we measure this from here to here, this was a 16% drop that we had. And that was violent. That was brutal. This literally happened. That 16% happened in 1, 2, 3, in 4 days. Now, it doesn't always happen in 4 days, but we typically do have those violent downturn. Now, let's see exactly what happened other times, right? So we lost it this time. We recovered that very quickly. Actually, I have two red lines here. Let me make sure I remove those so I don't put all these lines here together. There you go. See, every single time we actually fell below, when we don't have those big moves, is when we recover very quickly. If you look at this level, once again, when after we've had a long uptrend, once we go below, we have some violent move. This one ended up going for about 7%, getting back down there. This one went down. I'm just gonna take the first leg, 15%. See, this is what I'm showing you guys, because once we go below, unless we recover very quickly, we typically have a big downturn. Now, I'm seeing the exact same profile right now. We need something to push this market up. If not, the profile is very similar right now. Because what it is that we push down, every single time we have a retest of the 200-day moving average before we ultimately push down. Because once we try to take it, if we cannot, guess what that says to the algorithm? We cannot. That was a break and retest, because that's the way we did it as traders. Trust me, that's the exact same way the algos are programmed. They know a break and retest also. So that also tells them break and retest, that means sell. And again, machines don't take time to reason with anything. It's cut and dry. It's very cut and dry. Break and retest, so we selling. So this is exactly the kind of things that happens. So again, when we pushed up, right up to the 200-day moving average, what did I do exactly? I said, okay, you know what? This is my and we can put that right there. See where that this is where the low was. We came very close to here, and below that, right below here, I'm like, okay, you know what? I'm going to short it, and I shorted it. I took most of my profits, and I'm holding a little bit still, just to see what happens tomorrow. If maybe tomorrow we actually went down, because that is one thing I see. They were talking about on CNBC again, saying, well, it seems like a lot of traders don't really trust the what the administration is saying. Maybe they don't believe we are actually going to have a resolution. Okay, but then again, if you take a look at the 4-hour time frame, what exactly are we doing? First and foremost, let's look at our MACD. The MACD is still in negative territory, and it seems like it's getting ready to do what? A downturn, which would give us a bearish divergence. So now, if we get a bearish divergence in the MACD in a negative spot, right in the negative area, that means this is a very bearish pattern. All right. Now, I don't know if you guys can hear. You might hear some sirens outside. I live in New York, guys. This is the life we live. All right. That's the price of living in New York City. At any given time, you may have a lot of sirens just blowing off all the time. All right, so this is exactly what we're doing. We try to pop up, we couldn't do it. So, but the good thing is we do have some support levels holding things right there. But I must admit, as of right now, things don't look too good. That's the 4 hours. The 4 hours is building that, but it's not there yet. So the lower time frame should give us a more indication of what's going on. Now, this is where we start to get into trouble. What exactly are you guys seeing here? First of all, you guys can see that once again. It's not dead yet, not dead yet, not done yet. It's coursing down, but it hasn't done it yet. All right, that's in the 2 hour time frame, which is a big leading indicator for how the 4 hours in the daily is going to go. Now, when you look at the charts, that's the other part, right? When you look at the chart, what do you see at the chart right there? This is what I told you guys about. This is a possible double top, right? This is a possible double top. You can see it. That's the M. This is the support that's holding us. Now, if we lose that support level tomorrow, say we gap down, we lose this support level because I believe we're supposed to get job numbers tomorrow. So we'll see how good or dismal that is. So depending on how that is, we may gap down or we may gap up. Now, if we end up losing this level, which would be our neckline, which is that's 651, we might be in trouble. I can see us sliding down because there's not much resistance all around this area here. There's not much resistance, and we this is what we have in right now. And again, had somebody fixed their trend line, you guys would have seen exactly because I did not update this trend line yet. This is the trend line that we have. This is why I love trading with trend line. Updated trend line, we hit here, and right now we are at the top of this trend line, which is what is the one thing I keep telling you guys? The market like to choose the path of least resistance. So what do I mean by the market choosing the path of least resistance? Let me go full screen on you guys. Meaning whenever the market is in a range bound or whatever it is, right? Whenever we at support levels, the higher probability of the market is to push up because that's the easiest thing to do. There's the path of least resistance, the easier path, right? And if we are at resistance levels, the path of least resistance is the way down. All right, so this is what I mean by the path of least resistance. So imagine yourself being trapped in a burning house, right? Why are you going to try to make sure you can open that door that maybe there's a fire, there's a couch burning right in front of it, or would you just get out that window that's wide open right behind you? You take the window. You might try the door because that's the easy way, but guess what? I mean that's the best way. We might try the door, but guess what? If the window is open, that's the easiest way to get out. You jumping out the window and just get out. So this is the exact same way. Just look at the market the exact same way. It's a simple analogy. Just look at it that way. That's what I mean by that. Now, the market is also forming a bit of a wedge pattern. Excuse me. So this is a bit of a wedge pattern that we have here. So we're bouncing here, right? So that means we're going to break either from this level, we're going to break up, or we're going to break below that and do this. All right, and I don't think we have much time because you guys can see how close, how this is how tight this wedge is getting. It's getting pretty tight right now. I want you to do that tomorrow when you're trading. Do if you're trading intraday and you're trading the SPY, do me a favor and just do that. Take a point here, connect it to the top of this, and connect it to the top of this red candle and just watch and see how the market reacts every single time it gets to that line, whether it's right here or right here or here. Just watch and see how it reacts. You will be amazed on how now this is some real game I'm giving you guys. This is some real game right there. All right, just watch how it reacts. Don't do anything with it. Just watch it. All right, just watch it. You'll thank me later. I promise you. Just make sure you guys watch it. Now, the other trend lines I'm going to put right in here for myself is right there. I'm going to put this right here. When I have this here, so that means what? That means if I have this move and the market push down and I come to back and I get to this line, that to me is that is my cue to get out. That's my cue to get out. This is why I'm going to keep this line right here as well. Yeah, sure, we might go through it, but this is partly how I do things. All right, that's how I trade. That's partly how I do things. So you guys just watch that. All right, now let's go in the 30 minutes time frame. Let's see exactly what we're doing in the 30. The 30, I think the MACD is already saying it's time to go down. The MACD already made a lower high. That's the 30 minutes time frame. We already have a bearish divergence in the MACD. All it's waiting to do, excuse me, is plunge into negative territory and keep on warning. That's all it's getting ready to do right now. Hey Jeff, I see you, man. That's what this is getting ready to do right now. So you guys gotta keep paying attention to that. Again, as of right now, we look to be most likely having a down day tomorrow. And guess what? That coincides with on Friday we had a green day. Was not Friday. I'm sorry. On Tuesday, we had a green day on Tuesday, and the market sparked up more than 10%. Well, we went down more than 10%, which means we had an 85% chance over the next two trading days of having a reversal, meaning a red day. So that means today was green, tomorrow is most likely red. 85% chance. That's what the VIX tells us. All right. 85% chance. And guess what? The conditions right now are aligned. What do I mean by that? We are at resistance level, what at the top of a trend line, right below the 200-day moving average. And guess what? If I pull this up, this is the 200-day moving average in the 30 minutes. You guys can see how this keep on hitting the 200-day moving average right there. Hit it, push down, come hit it again right here multiple times. Keep pushing down, and it keeps on wanting. It's just staying below. It's literally just hugging it and pushing below. All right. So this is what the SPY is looking like. Again, levels we will be watching for. This is still out one of the main levels. 653 still going to be one of the main levels to watch for. To see if we gap down tomorrow, can we take 653? Tomorrow, that's one of those key areas we gotta keep watching for. Now let's take a look at the Qs, the Nasdaq. This is the Nasdaq 100, one of my favorite thing to trade because that Bible moves. It moves fast. All right. If you don't have time to waste and you want to take a trade real quick, try to, at the same time, you're going to figure out whether or not you right or wrong in that trade because it's going to hit your stop loss or it's going to hit your take profit. It doesn't mess around. That's the way it does it. It is the exact same thing. This is the 200-day moving average. We're below it. We just went, and right now you guys can see we sort of like losing momentum. Those guys are trying to push the market up, and retail traders are saying, we're not going to get served up as bait for you guys to dump your shares on us again. Retail traders are just not doing it, and that is one of those things I'm so happy to see because I'm tired of those guys, those big fat cats calling us dumb money. This is literally what they call retail traders on Wall Street. Dumb money. When they talk about it. Oh, the dumb money is doing this. They started calling us retail traders once we started having social media and everybody starts knowing about those terms and whatever. I guess they feel sort of bad saying, hey, let's not just call these people dumb anymore. Let's call them retail traders. So now everybody refers to us as retail traders. But for the most part, they called us the dumb money because it was so easy to manipulate and take our money. Guess what? Now we know better. Now we know better. All right. You can still get us a few times because you guys still hold the power, but we're doing okay. All right. Anyway, let me get off my soapbox, man. Let me get in. Let me get it. This is the 4 hour time frame. I mean, this is. I don't want to waste too much time on this because this is almost exactly identical to the SPY. You guys can see that here. That's pretty much identical to the SPY. That's the same pattern being formed. The 2 hours are doing the exact same thing. You guys can see that double top is being done right here. And again, if you are not aware, the reason you see the S&P 500 is so similar to the Qs, the Nasdaq, is because the same stocks that are in the Nasdaq are also part of the S&P 500. So the Nasdaq 100 has the best 100 tech stocks, and the S&P 500 has the best 500 stocks in the whole stock market overall. So every sector is part of it, but guess what? All the top tech stocks end up automatically being in the S&P 500 because those companies are so much more profitable than almost anything else. So this is why whenever you see tech goes down, if it goes down a lot, it is very hard to see a day where you see Microsoft, Apple, Nvidia, who else I can put in there? Alphabet, Google, that's Google's parent company. It's very difficult to see all those companies are down and see the S&P 500 being up. Although those companies are tech stock. All right. Now let's take a quick look at the VIX and see what we are shaping up to do tomorrow. Um, the VIX did not really do. Oh my goodness! What a pop! What a pop! So the VIX came to those former resistance, now being used as support right there, and just pop right back up. That thing pop, not really giving us an exact, we're not really getting an exact pattern here. There's not an exact pattern here. I can't give you guys one. This seems a little bit iffy. I mean, I guess push come to shove, you can say, hey, we pushed up. We have not traced back 50% of the move, so technically this is still considered as a bull flag. So we'll see how that plays out tomorrow. Again, some data comes out tomorrow that can change a lot. Whatever data comes out, a lot can change. Taking a look at the 30 minutes, we pretty much stay flat. And if you are trading the market today, you're not surprised because we pretty much went sideways almost the entire day. So we got down, and then all we did. Now this is the bit of a scary part. You see how I was showing you guys the stock market was below the 200-day moving average, which means that means now in the short term on a micro level we are on a downtrend, right? This is consolidating on top of the 200-day moving average. This is the 200-day moving average being used as what? As support level. So that means, again, path of least resistance, at least for now, seems to be up. Now, regardless of what we're going to do tomorrow, I want to make sure I put this here. So if we're going to pop up, we're going to pop up. By the way, once again, guys, if you are here, please give me a like, drop me an emoji, let me know where you're watching from or anything. I appreciate any engagement you guys give in the chat. Why? When you guys engage in the chat, whether it's asking questions or whatever it may be, this is something that really helps the channel grow. It helps the algorithm push it out because why is telling letting the algorithm know I'm not paying for bots to come on my live to watch those videos. So you guys being here, I do appreciate it. But engagement would really help. If you don't have time or if you're too shy to ask a questions, give me an emoji, give me a thumbs up, hype the chat. I would really appreciate that. Give me a fire emoji, something, anything. I would appreciate it. When it comes to that, guys, I have no shame asking you guys to do that. All right. I'm not asking you guys for money. I'm just asking you guys to just do that one thing for me because that is very important. The algorithm feeds on things like that. They feed on engagement. So if you guys have any questions, I'll be more than happy to answer any questions you have. If you don't, still give me some type of engagement. I would really appreciate that. All right, just going right back to the chart. All right, that's the VIX. We don't know where the VIX is going to go yet. Let me see here. Let's take a quick look at Bitcoin and see what Bitcoin is doing. Seems like Bitcoin is not yet at what people were calling 50,000. Didn't see it yet. It seems like I mean it was like 85,000, not yet. Now I'm seeing people say we might be going to 50K or 45K. I don't see that yet either. So as of right now, we were doing a bit of a setup in the 4 hours, which was an inverted head and shoulder pattern. I thought we were going to squeeze, but again, what do I teach you guys every single time? The one thing I tell you guys, it's not just about a pattern being formed, is where is that pattern being formed? So now it seems like we still haven't been able to get that push. Instead, we are actually building a possible double top. We may still squeeze now, okay? We may still squeeze. Maybe this was a first leg, pull back for a second leg. So there's that other option on Bitcoin. That other option can absolutely happen. But the likelier move right now, path of least resistance. All right, you cannot buy this. Well, let me rephrase. I would never buy this to go up at this level because we are at a structural resistance level. I would rather buy this to go down. All right. Now, if we take this level and I do have the I do have that break and retest, I would get it. Right. So we would have to do this, retest the level. Okay, I can see myself taking that. But as of right now, the only way I would trade this is this and shorting it so I can take the leg down. That's the only way. And by the way, if you do not know how to trade options on Bitcoin, a lot of platforms does not offer that. You can use BITX. BITX allows you to buy Bitcoin options on many platforms. Man, this thing is dead. This thing, I am glad I got out of this thing. At some point when we were way up there, I had it, and the reason I had that was because it was one of those things that pays. They pay good dividends, or at least they used to. Oh yeah, that dividends went down to the drain because they just not making much. Yeah, because it used to be for each share of this thing that you had every single month you were getting nearly 57 to 74 cents per share. I think this has dropped now to 1 cent per share. I mean that is a drop. Then again, if I wanted to, if I know I'm going to hold that for a long time, this would be an area where I would start nibbling again, nibbling, accumulating, or DCA, meaning I would just buy a little bit because it is possible that it comes all the way down to about $8. But guess what? If I buy, say you buy 10 shares here or 25 shares here. If it drops again, you buy another 25, another 25. You just buy just little by little, or 10, 10, 10, and you just whatever that. And guess what? Let's say in 2 years, if it takes that long, let's say in 2 years or in 6 months or 12 months, this is at 16. If it's back to those levels ever again, at 68, you are sitting pretty. And mind you, this is not just the what you would be getting. Again, this is not interesting for you guys to go and buy this, all right? I'm just letting you guys know how I would play it. And again, the beauty about that is the fact that this thing goes up, I would be also be cashing in on some dividends payout. And if you're looking at the dividends payout, again, the higher it is, the higher this thing goes, the higher the dividends. Look at that. You can see those at 54 cents for this month, 53 for this month, and so forth. Let me see. What do I have here? Don't forget like, comment, and subscribe. I appreciate that, James. Absolutely, I appreciate that. What are your thoughts on oil chart? Is pivotal on where the market will go short term. Absolutely. Let me just pull that. Where's my? Actually, I can pull up the futures. I'm actually still long oil long term. I have taken some profit on oil. I'm not trading crude futures exactly. I'm still long on oil, but this is not what I trade specifically. I don't trade that. You know what? Let me just show you guys exactly. This is the play I did. You guys can still see my chart will still be okay. So this one, I actually got in this one here. We actually pushed all the way up. That's Chevron. For anybody who doesn't know, that is Chevron. And I actually closed my position on Chevron way up there. Now, what am I still in? This is the move I'm waiting for on ExxonMobil. That's again fair disclosure. These are things I'm already in these things. I want to let you guys know I'm already in these things. These are things I've already taken profit on and things like that. So I'm not letting you know, letting you go to go jump on things. I just wanted to cover that, just show you guys exactly this is what I'm trading. Obviously, I'm not going in this right now. You guys can see since I had that wedge pattern here, so I've been in these plays for a long time. This is not new play. These are not new plays for me. Now let me go back to crude oil. Crude oil I see still going higher. Why? I don't see us really getting a ceasefire. I hope we do, but I don't. The way things are going, does it seem like we are going to get one based on actions? Again, I'm not talking about the rhetoric out there. Based on actions, um, it's not going to go go up as fast as I thought it was going to go initially, because Iran has decided to give a free passage to Spain, I believe Pakistan, Iraq, China, Russia. I may be forgetting a couple of other countries that are sort of like India as well. I think they're giving free passages too. Any U.S., Israeli oil tanker or allied tankers are not getting the go ahead to pass through. All right. So the fact that those other countries are able to get some oil, that actually helps a lot. That is something that helps a lot. But at the same time, think about the damage that is currently going on, because we have oil refineries being not shut down but being damaged. We have in LNG spots being damaged. Things that Qatar and the UAE have said it would take them about 5 to 10 years to rebuild and have these things back to full capacity. Now, if we cannot get these things to full capacity, and as of right now, we operating at a deficit. What's on the market, available on the market right now, does not meet the daily demand for oil. So that means at some point we're going to start seeing that tightening, right? If you go right outside, if you did put gas in your car yesterday and you go back to the gas pump today, chances are you're paying more today. Chances are you are paying more today. So I'm looking at oil. This is the way I'm seeing it. All I'm seeing so far, because if I'm looking at this move, let me just do that. If I'm looking at this move right now, no. Actually, I draw this a bit wrong. What are you doing, Lord? Come on. There you go. Boom. If I am looking at this move, this is still a bit just a little bit riskier. But this is not a move that is canceled for me yet, because ultimately at some point all these all these efforts to keep oil prices down, which is why you hear Trump coming out and saying, "Oh, there's 5 days." Why? At 5 days, everyone is shut off from the market. You can't sell stock, you can't do anything. Oh, we're gonna have a deal in 5 days. Why? Our troops will arrive in the Middle East over the week this weekend. So he's buying time, saying we having a peace talk, and that peace talk will take about 5 days. Guess what? It's a miracle that those 5 days coincide with exactly when Marines deployment are going to get there, right? So these are all these things. Again, there are a lot of speculation. There's a major operation that will be going on over the weekend, trying to take control over Carg Island. Now, if that fails, if this thing fails, coming on Monday, I'm gonna let you guys know that right now on Friday, I'm definitely putting not a little bit. I'm willing to take a little higher risk on putting hedge protection puts, right, on my portfolio, because if that operation does take place over the weekend and that operation fails, we have a bunch of dead Marines or whatever it is, the market is going to be bloody come Monday. Bloody. So if you just risk just a little bit, the market will be bloody and oil will spike, because I do believe if something like that happens, or even if it's successful, right? So that's the other part of that. If it is successful, what the Iranians say they will do, they will completely mine the entire Strait of Hormuz, and at that point, we also have the Houthis in Yemen that said they will also block all passages in the Red Sea. So now you're talking about a choke point at both areas where we can have some oil and natural gas come out. So that means there will be no ship transiting through anything. Nothing comes coming out. It doesn't matter how much we produce at home. We there's nothing we can do. We cannot meet the global demand. We just cannot meet it. So that means gas is going to keep going up and up and up and up. Well, let me just say again. Let's say oil. Oil is going to keep going up and up and up and up. And as I've always tell you guys, if we see things like that happen, truckers will go out of business, food prices will go higher, and as of right now, economists have actually said this is why it was so important for these guys to keep on just making up stuff. Our line, our absolute line for crude oil is $125 per barrel. Going above 125 for more than 3 days, those guys have already said will trigger recession in the U.S. economy. That will be a recession if we go above 125 and stay above that level for more than 2 to 3 days. So there's a lot of effort being done, but how long can we keep it there? All right, because eventually people will see things are not changing. Because I think it's just a matter of buying time just to see if things are going to change. But it doesn't mean like things are definitely going to change. Um, all right. Okay. I see your questions. Unfortunately, I'm gonna have to wrap up. I do have a paid members I meet with after those lives, guys. So I can try to address that question tomorrow. So I'm gonna have to one. But thank you guys for being here. I do appreciate you guys being here all day and every day. I do appreciate it. I try to come here and give you guys the information that you needed. And again, one thing I will tell you guys also, it's always POP. Every single day is process over profit. Follow your process, the profit will follow. Do not chase. If you miss the trade, wait for the next one. I literally had this situation happen to me. For the guys that were trading live with me this afternoon, the Asian market on the S&P futures, I missed a trade that I called the play, and it played out exactly the way I wanted, and I missed it. I was so upset, but guess what? I didn't chase it. I just looked for the next one. I wait for the next one. The next one showed up. I took it. Perfect play. All right. So be patient. If you missed a play, it's okay to get upset. As I was upset at myself for missing that trade, but I did not chase it. I did not do anything crazy. I did not get emotional. I don't do that. I don't jump on trade. I let the trade come to me. You come take me. I'm not chasing you. That's the way. That's I have my levels. I'm sitting here. If you don't come to that level, that's okay. If you come back, you keep going up, and you hit my stop loss, that's fair game. But I'm not going to jump in because I'm so desperate just trying to get on a play. So this is how you gotta stay disciplined, right? And more importantly, remember what this market is. It's a very volatile market. So when you get, it's about getting in, get green, and get out. You guys cannot try to be as aggressive and as where you want to hit a home run every single time. Base hits adds up. If you come to the market every day, you make 450, 500, and whatever, guess what? There will be a day where you catch a trade that just flies. It's going to happen. So every single trade don't have to be that. But as long as you keep hitting base hits, you stay in the game. You stay in the game long enough, you're going to hit a home run. All right, guys. I appreciate you guys being here. Take care. It's been great. Empire Path, obviously, yeah, it is POP all day and every day. You guys take care. I will see you tomorrow. Best of luck. Again, remember to be disciplined. Remain disciplined and do what you must. You know what. You know what to do, guys. Watch the levels. Stay disciplined, and it's POP. Take care, guys. I'll see you tomorrow.